Market Wrap, where we discuss everything that went down this week and much more. I'm Neha Vashisht Mahajan, and today, like every week, I have Mr. Kranthi Bathini with me. He's the equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranthi, for joining us today on ET Market Wrap.
Thanks, Neha. Thanks for inviting me on your show to share my market views with the viewers of ET Markets.
Well, the pleasure is all mine. So let's quickly start our session of the day. So the first thing I would like to discuss is about RBI. So RBI has kept the repo rates unchanged at 6.50%, and I want to understand what can we expect now. This is the seventh time where the rates were kept unchanged.
Yeah, Neha, you are absolutely correct. RBI have maintained the status quo at this point of time, yeah, seventh time in a row. But good thing
Hmm.
is, we are not following the footprints of the global markets, where when the one other hand, when Fed has been earlier, when they have been rising the interest rates, RBI
Hmm.
taken a stance. They kept the rates in a status quo. So at the current moment, also RBI is maintaining the status quo. They are just waiting for some more data for get a
Hmm.
feeler for the cool off uh, of inflation. And also
Hmm.
today's RBI press conference, RBI Governor Shetikanta Das made a clear point. Are we are going to follow the footsteps of Federal Reserve or not? So he
Hmm.
made it clear today on a note. He said that uh, our monetary policy stance is by and large, we will be looking into the internal issues, the domestic macros predominantly, the data that
Hmm.
is originated from India, and and if it's needed, once the data get cooled off, once the inflation comes into their comfort level, RBI ready to take uh, uh, a rate cut thing. They are ready, but they are not
Hmm.
in a mood to follow the global footprints at this point of time. They are
Hmm.
still waiting for some more comfort level to take a decision with respect to rate cuts. Most probably, currently at this point of time, oil has been inching up. Okay,
Hmm.
that's needed to cool off. Okay, if the oil comes below $80 per barrel, that gives more comfort to the RBI. And also,
Okay.
right now in May, the monsoon is crucial. So, if we get a good monsoon, the normal monsoon,
Hmm.
that will help the food prices to come down. That in turn, that will bring down the inflation further. So, in that stage, RBI will be in a comfortable position to take any decision with respect to the rate cut. But Neha, just further analyze the data. What are
Hmm.
the points that made the RBI MPC committee to maintain the status quo of the rates? One thing is that despite of the higher interest rate regime in the last few quarters, the credit growth is going at a strong note, and
Hmm.
also the liquidity that is available in the system is accommodative. It's quite strong. So these are all the points made the RBI governor to maintain the status quo at this point of time. And also
Hmm.
there is the growth is going very strong. So
Right.
if you and me are in his place, we will be definitely taking a stance with respect to maintaining the status quo.
All right. So, Mr. Kranti, benchmark bond yield also touched a nearly 2 month high after RBI maintained the rates. So, just to simplify it for the investors, what does it mean for the investors?
Uh, a very interesting question, Neha. Okay, as RBI interest rates and the bond yields are inversely related. So
Hmm.
when RBI have taken a status quo with respect to the key interest rate measures are concerned, key policy measures are concerned, so
Hmm.
that prompted the bond yields to go up. Uh, we can see a sudden spurt in the bond yields at this point of time.
Yeah.
If the RBI have taken the interest rates to key measures to uh, take it low, okay, the bond yields okay would have okay somewhere okay in the status quo, or they might have come down. So at this point of time, what we can sense is right now RBI have a challenging situation at this point of time. one hand, RBI want to develop, the Indian government want to develop the bond market, okay, by and large, make Indian bond markets as one of the prominent market in the world. It's a long way to go. We are in the initial stages of developing the bond market in India. So one need to maintain with respect to the Indian 10-year bond yield is concerned, and also
Hmm.
the developed markets are, you can say, the Western economies like US, and also the 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 difference of the interest rate, the bond yield, the difference of the yield.
Hmm.
India should be attractive to make the Indian yields to be attractive in the bond market is concerned. So that is the one of the crucial thing.
Okay.
Currently, the RBI also looking into that.
All right. Okay. So let's now come to gold. So gold was hitting lifetime highs. Even yesterday, it hit a new lifetime high. But today, we did see a little bit of a fall. So, what is the outlook for gold, and what is happening with gold right now?
One thing is, Neha, okay, gold is in a bull market. Okay,
Hmm.
it is going up in the past. I can say last 3 months, uh, uh, it is inching high. One thing is, normally people tend to say the gold demand comes from the retail investors. Okay, when the marriage season comes, we
Hmm.
tend to say the gold prices will go up. Uh, but one way it's correct, absolutely correct. Okay, if there is a festival demand, Dhanteras kind of thing, and the marriage season, okay, the gold demand tend to go up. This is
Hmm.
one way to look at the gold prices. But predominantly throughout the globe, okay, the gold purchases are done by the central banks and the banks across the globe. Okay, they want to
Hmm.
keep some portion of their reserves in the form of gold. So
Hmm.
so last 2 years, if we observe, the Indian government has been, central bank, Reserve Bank has been increasing their gold reserves. So across the globe, the main key demand, okay, coming from the central banks. So at this point of time, in anticipation of rate cut from the Federal Reserve, okay, the central banks across the globe, the institutional investors across the globe, they have been increasing their uh, gold reserves in their holdings. So that
Hmm.
is where it's prompting the gold prices to go up. That is the main key reason for the movement in the gold prices. If the Federal Reserve going to reduce further gold prices, okay,
Hmm.
my apology. If the Federal Reserve
No worries.
reduce the interest rates in the next rate cuts, we can
Hmm.
expect some more rally in the gold prices going ahead. So that's where, in anticipation of rate cuts in Federal Reserve, the gold prices have been going up.
Okay, so how should investors go about it? Should they stagger the investments or go for a lump sum kind of thing? Because it's already reached a point where some people might be thinking that it has already rallied. So, what is your suggestion to go if someone is wanting to buy or add gold to their portfolio?
Yeah, yeah. You rightly mentioned, Neha. One can, if anyone want to invest in gold, okay, and one need to take into consideration also, gold as a asset class, it is a zero dividend yield asset class. So we don't
Hmm.
get anything in return. Okay, it is as an inflation hedge and the currency hedge. Uh, so if the investors have some kind of they want to increase their allocation towards the gold, uh, they can buy gold in a very staggered manner, okay,
Hmm.
because the Federal Reserve is not in a mood to reduce the interest rates immediately. So some time is there, we can see some kind of gold entering into a consolidation phase in the medium to short term, okay, not for the longer term. So one can add in a staggered manner if they want to increase the gold in their portfolio.
All right. Okay. So moving ahead, I want to discuss about some sectors that will be in focus till we are done with the elections. So, which sectors do you think are in focus right now and will be there till probably 2 months or something? Because these elections are pretty long.
uh, Neha, coming to the sectors in an
Hmm.
election year, okay, normally the FMCG sector, normally tend to do well when in any election year. Okay, because
Hmm.
the rural consumptions goes up, rural uh, incomes goes up in a election year. That is a typical tendency. And if
Yeah.
you see, the FMCG stocks have been in a consolidation phase in the past 1 to 2 years. If you look at the prices like HUL, they have not done anything during this phase. So investors, and at the same point of time, right now, the mood of the market is different. People want a
Hmm.
multi-bagger when they make any investment, when they are making any investment decision. But FMCG stocks are quite stable stocks. They are very conservative stocks. Okay, they give a kind of we can expect uh, one can beat the real interest rates by investing in a FMCG stock. One can expect a maximum a mid-teen kind of returns from the FMCG stocks. So investors who have a uh, uh, less risk appetite, one they can choose the names from FMCG. And coming to the general tendency at this point of time, we are getting the feelers and getting the data from the NBFC and the banking and financial services stock. These stocks have been
Hmm.
in a consolidation phase, except the PSU stocks are concerned. So the credit growth is quite strong despite of the high interest rate regime in what we witnessed in the past 2 3 quarters. So one can add NBFC stocks also. Already in the last fortnight, some kind of rally what we are witnessing in NBFC stocks, uh,
Hmm.
and also the reality numbers have been quite good, quite strong. The real estate sector has been one of the outperformer. So companies which are housing finance companies also, one can keep
Hmm.
it on the radar
Okay.
for these kind of times. If in the next coming subsequent MPC meetings, okay, if the interest rates get reduced, okay, that will further benefit these companies. So and also, on our show we kept on discussing about the defense stocks, and the defense
Yeah.
stocks had a fabulous rally in the last fortnight also. So any dip in defense stock one can add for a medium to long term perspective.
All right. So now coming to next week and next week levels. Today the market is a little flattish. So what are the levels for Nifty and Sensex for next week that investors need to watch out for?
Now, coming to the levels are concerned, 22,500, that's where the Nifty level is quite crucial at this point of time. If Nifty could able to sustain at this level, okay,
Hmm.
we can anticipate some more momentum in the Nifty is concerned on a weekly basis. As long as Nifty is below 22,500, okay, we can expect some consolidation in the broader market. But it is by and large going to be a stock specific action right now. We can see last we also need to acknowledge the kind of recovery what we witnessed in the market is quite strong and fabulous. That's what the classic case for that will also acknowledge, okay, Indian markets are in a strong bull market at this point of time. So there are ample opportunities. The leadership position has been changing on a every fortnight. Right now, the
Hmm.
large cap companies like HDFC Bank, which was the laggard that has been uh, keeping the markets in the positive territory, like Reliance Industries. So the bellwether stocks are keeping the stocks in the positive territory. And now,
Hmm.
next week onwards, we are entering into the earnings season. So
Yeah.
the earnings seasons stocks are going to lead the markets in the coming next couple of weeks.
All right. So before we move to the questions from the audience, one last thing I would like to ask you is that is there any specific factor or multiple factors that we need to keep in mind for next week? Any data points that will be released?
One data set one need to keep crude on their radar. Okay, crude has
Okay.
been going up at this point of time. So that is the joker in the pack for Indian market. Sometimes we tend to ignore crude. If the crude is
Hmm.
going out of hand, okay, that's going to create a domino effect on Indian markets. So crude is the one thing one need to keenly observe at this point of time.
All right. So let's quickly move to the questions from the audience, and after that, we'll close our session for today. So Vinod is asking about your views on BEL and Zomato for long term.
BEL also, Neha, we witnessed, we have been discussing about the defense stocks. So
Hmm.
BEL, one of the strong defense stock in India, but the market capitalization is currently at a higher note at this point of time. So one can add the company at dips, okay, for a longer term. Definitely, he can add in a very staggered manner. Okay, whenever there is a dip that comes in Bharat Electronics Limited, we can add at
Hmm.
dips. Currently, stock is trading in the range of 220. Okay,
Hmm.
he can add if the stock comes below around 200 rupees is a comfortable level to add VL in one's portfolio.
All right. Okay. Another query from Vinod was on Zomato also. So he was asking about Zomato for long term also.
Zomato also the same case, Neha. It also witnessed a fabulous rally. Okay, and the stock, in fact, it touched a low of 80, and the fabulous rally what we witnessed, Zomato is commendable. Uh, One thing is, while investing in Zomato, okay,
Hmm.
you need to have a high risk appetite, and going ahead, these are the very interesting business models, quite strong disruptive business models. So
Hmm.
the what we can expect from Zomato is main one foremost thing one need to keep in mind is when the company increase its profitability. That's the important thing. So
Hmm.
it just made got into the positive territory, profitable territory. How the scale up of the profits going ahead, that's going to determine the price of Zomato going ahead. So given the kind of the urban spending is concerned, disposable incomes are concerned, okay, Zomato is going to do well in the coming quarters. But first and foremost thing is these quarterly earnings are crucial for Zomato because of the earnings are quite crucial for Zomato price to sustain at this level.
All right. Okay. So jumping to our new query, which is by DVS Sharma. He's asking view on Sula, Sirma and rate gain.
Okay. First, Sula, the stock has, if you see the long-term chart of Sula from the time the IPO got listed, okay, the stock was having a fabulous rally, and as to mention, uh, it is one of the only listed player with respect to uh, the grapevine is concerned in India, and also they
Hmm.
have good amount of revenue diversification towards the wine tourism and the hotel business, the resort business they have in Nashik. Right now, the tourism stocks and hospitality industry is concerned. Uh, that has been doing fabulously well. If you name any stocks or any uh, stocks in the sector of hospitality and see the tariffs and prices of the hotels how they are going up. So
Hmm.
definitely we need to say there is a revenge uh, demand in the tourism industry. So Sula,
Hmm.
in one way, they're going to get benefited. So we can expect a strong quarterly earnings for next couple of quarters for Sula. One can add the stock. The stock had a correction recently. So at this price level also, any dip that comes, he can add for a medium to long term perspective.
All right. Okay. Next query is by Venugopal. He's asking Bari Renewables and KPI Green buy or hold.
Uh, One thing is, both the stocks have been fabulously going up. I can say in KPI Green, there is always a speculative activity that runs in in this stock. 5%
Hmm.
stock goes on upper circuit and it will come down again, it rises. So, a lot of speculative activity that happens. Uh, and these stocks are at this point of time they are fully priced in with respect to their valuations are concerned. So if he have a high risk appetite, okay, he can add in his portfolio. But these are all very strong business models. Okay,
Hmm.
and it is the right now the emerging sector right now. So if you have the high risk appetite, definitely one can add the names like Wari and KPI.
All right. Okay. I'll just take one or two more queries and then we'll close our session. Another one we had from Priyank. He's asking which stocks are you bullish on for next week?
Uh, Neha, I'm not a technical
Yeah, it's a very,
expert,
very short
okay,
term
and
type of.
and
Yeah.
I refrain myself talking about
Okay. So let's
for,
skip it. And I'll take Kinjal's query. He's asking about your view on Asian paints.
yeah, very interesting question because many of the retail investors have been buying Asian paints. Right now,
Hmm.
it's the market leader. Uh, in the medium to short term, crude oil prices one need to watch because their margins are directly related to the crude oil prices.
Hmm.
Coming to the medium to long term, okay, yeah, if you take a horizon of 1 to 2 years, one can hold on because we can. What we are witnessing is a fabulous rally in realities stocks and reality
Hmm.
sales. Okay, directly, okay, Asian Paints is going to get benefited, but from here onwards, okay, the competition has been going up. Okay, the other players like JSW and the Birlas Grasim, they have been entering
Hmm.
into this space. So how the tussle is going to happen? How they are going to take any pie from the leadership of Asian Paints, or Asian Paints is going to be the remains as the leader, market leader. Okay, that's going to determine the price of Asian Paints. But it is a fully priced in stock, but always the strong names commands premium in terms of their valuations are concerned. So
Hmm.
if the investor have a very conservative risk appetite, she can add Asian Paints at every dip. But from this level, okay, one need to think this stock in a longer term perspective, and
Okay.
uh, one can expect a moderate returns from here onwards.
All right. So one last query I'm picking is from Abhishek Sikka. He's asking, can you please share views on ABB, Indigo, and HAL?
Yeah. ABB also, with respect to the capital goods space is concerned, the stock was in a consolidation phase nearly 5 years. After the capex cycle started going up in India, what we
Hmm.
witnessed is ABB got doubled. In fact, from ABB shares, from the demerger, people got ABB Power Infra Company also, which is called as Hitachi Power right now. So,
Hmm.
for the longer term investors, one can add names like ABB, and we have been discussing about HAL. The stock from a market capitalization of around 60-70,000 crores. Today, the market capitalization is around 3 lakhs crores. So the company have fabulously going up. Okay, it is one of the key aviation and defense player in India. So one
Hmm.
can keep these stocks like ABB, HAL, and the third stock you said, Neha,
Indigo.
Indigo. I'll address both the first ABB and HL.
HAL.
One
Oh.
can keep these stocks as like a SIP stock. Okay, one can
Hmm.
add in a staggered manner on a monthly basis, or whenever there is a knee-jerk reaction kind of movement in the market, what we witnessed just a couple of weeks back. So those times
Hmm.
one can accumulate this stock for a medium to longer term perspective. While coming to Indigo, the same thing applies. One need to track how the movement in the crude oil price, that's extremely crucial for a aviation company. uh,
Hmm.
Given the kind of we are heading towards a summer, normally a holiday season, so tend to do well in a uh, holiday season is concerned, and summer is concerned, the aviation companies do well. If the investor
Hmm.
is there, longer term investors, definitely one can hold on to the stock for a longer term, because aviation in India is still emerging sector.
Hmm. Right, right, right. And it's also cyclical in nature. So longer term makes more sense in terms of that. So, all right. So we are done with the queries from the audience. And I guess it's time to close our session for today. Thank you so much, Mr. Kranthi, for joining us today on ET Markets live stream and talking about the markets and the market track.
Thank you, Neha. It's always my pleasure to share my views with the viewers of ET Markets.